What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is March 25th of 2022. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, we're going to be diving into the continuously growing trend back up to the upside as Bitcoin has smashed through the $44,000 mark and is testing up against resistance it has not gone past since as far back as the start of the year. So this is a big time for crypto. We're going to be diving in not only to the price and the data science models out there, but talk about why we're even more growingly confident that we're soon to see a breakout in the market. Something has got to give. All right, let's go ahead and dive straight into the conversation here, guys. As you all can see, since really the short term here back since late February, really for the past month or so, we've been holding around this $37,500 range for Bitcoin. And after multiple retests, the market order flow started to take control here. The bulls led back on the rally here and brought us back up to the short-term resistance range where we've gotten knocked down here in January, here within February twice, and then also here in early March. And now we're getting another final chance to be able to break through that range and see if the bulls can actually clear through any asks on the order book and drive the trend higher. Now, it's one thing to see this kind of confidence going on in Bitcoin. It's another thing to see it in the second leading cryptocurrency in the market, Ethereum. Ethereum has chartered up in a similar fashion to Bitcoin from its general support range around $2,500 all the way up to nearly $3,150 to $3,200 for Ethereum. Again, charting up towards price territory we haven't seen since back here in February. And if we take a look here at the ETH to BTC ratio, and that's really what matters here, is that we're not continuing to decline here. Strength is coming back here into price, and we've again established a consistent support range like we've done in the past, either setting in higher lows or consistent support. And this is again why as far back as May of 2021, when we had the first major final kind of blow off top, it seemed like an Ethereum at $4,000, and then we saw the pullback in price down to $1,800. We talked about how this was not a time to start getting fearful of a bear market, that we were having heavy mid-cycle corrections, and that's exactly what's been playing out here. We're now setting up here for another mid-cycle rally, not only to recover against those losses, but to be able to chart towards new territory. It's not going to happen overnight, but it will happen week by week and month by month here as we reverse the trend back upwards after establishing long-term higher lows here on the Bitcoin chart, showcasing the bulls in the long run are still accumulating. They're buying into these phases of capitulation. Now, let's go ahead and take a look at some of the key metrics here. First off, the Fear and Greed Index mapped over Bitcoin's price. Yet again, just like we had back here between May to July, or what we had back here in the March 2020 pullback, again, another mid-cycle correction, we could see here that we've had multiple days below the 30-40 point range here, signaling the oversold narrative in the market, the fearful narrative everyone's been calling so confidently that we're going to go to 20K, we're going to go to 15K or 25K, whatever price target here. And look, all the while, some of you guys might feel that way about it. I'm not meaning to despair your opinions. They're completely justified and just as reasonable as mine, right? Everyone has a different perspective on what the rational take is. But I got to be honest with you all, if I'm sharing with what my beliefs are and putting my money where my mouth is, which again, I can get it out of the market if I want, I got to be honest with you guys, it just doesn't make sense to me right now that we would actually go lower. We've been consistently making higher lows here and higher highs since as far back here as January. And there isn't any real reason for that capitulation. If it didn't come in during the Ukraine conflict or the inflation scare that's been taking the world by storm over the past couple of months, or another wave of COVID or some kind of unforeseen, event, I don't know why it would start selling off now. It just doesn't really make much sense on a macro perspective, and when we're considering the liquidity flows that would actually drive rallies or that potential correction in price. So it's an important thing to bear in mind there, right? And to not get caught two steps behind, trying to sell your Bitcoin here, waiting for a discount and it never coming, and then having to buy back at a higher price. And that's why dollar cost averaging can be so powerful. Now, on top of that as well, one big thing that I think a lot of people are really discounting and not keeping in mind is the HODL Waves here. The amount of Bitcoin that has not moved over a year or longer here. And that is a really important thing to talk about. We can see here that over time, these metrics going from anywhere from over 10 years or more down to just 1 year has been growing over time. And that's expected. That's normal. That's something that should be happening over time. But it's important to note here that we've just set in new highs here for the metric, passing here where we were back in August and September, right before the kickoff of the cycle rally up towards 60K from around the $10,000 range. And that is highly significant to showcase the contraction of available supply in the market, the amount of Bitcoin that is circulating between exchanges, being actively traded, switched between hands. It is now showcasing here the market, although being silent, is silently accumulating and not doing anything with that Bitcoin. Whales are not dumping on the market. They aren't causing this apparent bear market that everyone thinks is right around the corner, or at least something, right? And last but not least here, you've got the relative unrealized profit and loss, a good gauge here throughout history to understand when we're generally in kind of neutral territory, like the optimism and denial phase, and then also the hope and fear, greed side, euphoria and capitulation. And again, since back here in May, we've just been, for the most part, sitting in this kind of optimism denial stage, right? This general point of contestment here that, again, was right where we were here when we had the breakout back here. And again, right, if we were to see something, I mean, even just take this mid-cycle correction here, right, back here between June to March of 2020, where we retested down in the hope and fear range here, we haven't even gotten that this time. We haven't even gotten into the fearful kind of capitulation that we commonly see with these kind of pullbacks. And that was still just a mid-cycle correction according to the textbook definition of a bear market in crypto, which is the 80% pullbacks, right? So again, the thing to understand about this cycle is that, first off, this correction here has actually been good. We've been seeing those higher lows, and that's why we're not dipping into this range. But on top of that as well, we can see very clearly that this cycle is defined by heavy mid-cycle rallies and mid-cycle corrections. And the more you can kind of drive that into your mentality about investing in the space right now, the easier it's going to be able to stomach the volatility and then eventually ride the wave. Patience will most likely pay, as it usually does. Now, I think there's a lot of things here to look forward to in the market, guys. And one big thing that I think is good to emphasize is watching the total market cap here, watching the altcoin space, because we're about to, in total for the crypto market, get back up and reclaim that $2 trillion mark. We've been up over 9% here this past week, with 9.6% in returns last week. Crypto market is feeling the love. It's not just Bitcoin. And there's a ton of different plays out there in the market that you can definitely keep an eye on there. But for me, I'm going to be focusing on a whole range of different sectors. We just did our recent altcoin video where we talked about some of the interesting plays in the play to earn space and the layer 1 protocols, as well as the potential layer 2 plays for new sectors that really haven't gotten all the buzz just yet, like the enterprise blockchain space. But one project that I want to talk about here today, which is our sponsor for today's video, is the Oasis protocol. Now, if you haven't heard about the Oasis protocol or the Oasis Foundation, Oasis is focused on building a layer 1 blockchain network that allows for high throughput scalability, and on top of that has a heightened emphasis on privacy preservation for transactions. And this is something that I think, again, doesn't get talked about enough in the crypto space as to why it's important. It's not for the sheer fact of remaining anonymous on the blockchain or trying to do nefarious things, but in fact is a huge barrier from major institutions and financial giants from getting into the DeFi space. When you're utilizing networks like Ethereum, you constantly have to worry about the fact that any amount of information or data on chain is public. It's completely available and transparent. And all the while, transparency and validity of transactions is important, and one of the big reasons why blockchain is great. Having the privacy of transaction data or who you're maybe interacting with on chain while still maintaining that verification is incredibly important towards scaling DeFi from the multi-billion-dollar market it is now to a multi-trillion-dollar market. And one thing I really like about the Oasis Foundation is it's not just an idea here, but they've really been going heavy on scaling out DeFi and open finance, not only to the current power users in the space, but really to the next wave of adopters. They've been working with large companies such as Binance, as well as the BMW Group and other Fortune 500 giants in order to build real applications within the Oasis ecosystem. Now, some of the big highlights here that I think are really important to understand here is their focus, again, on privacy and scalability. You could do transactions in the network on average for 99% less cost than you would on networks like Ethereum, which can have pretty heightened gas costs to do anything quite complex or into doing with smart contracts. And on top of that as well, they've got other focuses such as tokenizing data and parallel smart contract layers. Now, if you guys are interested in maybe potentially getting involved or learning a little bit more, not only can all of you join the Telegram where you can learn a lot of great information, but if you're a developer, consider building and applying for a grant. We've got some links down below in the description where you guys can learn more information and see if the Oasis Foundation and the ecosystem behind it is really a fit for you, where you could possibly build some great value and opportunity. They have a $200 million fund that they've put up for people to build applications within the ecosystem, so it can be a great way to kickstart your journey into the blockchain world of development with all the necessary resources to build some really powerful applications. But on top of that, you can also become an ambassador and run a node and play your role in developing the ecosystem. The big thing that I want to really emphasize here when it comes to a network like Oasis is that as these layer 1 protocols are coming out that are building kind of alternative routes to Ethereum or alternative value propositions against networks like Ethereum, the big thing to always look out for is what they offer dramatically different from these networks. What big bets are they placing? And I think this focus on privacy preservation while also maintaining scalability and still bringing on very useful applications and smart contract functionality is going to be a huge standout, because I don't think privacy is coming to Ethereum anytime soon in the near future, at least in a scalable and meaningful way. And this is where Oasis really stands out as a protocol. Now, on top of that, it's not just an idea. It's not just an ecosystem that's hoping to have something built in the coming future. They've already got a variety of applications being built within the Oasis ecosystem. One of them being Uniswap. Uniswap is similar to, Uniswap in the case of Ethereum, but it's a fair launch project and focused within the Oasis ecosystem, offering automated market maker or decentralized exchange capabilities to everyday users. One of my favorite things about the protocol is not only all the little details around being able to earn the token through the actual protocol, it being fair launch, but on top of that as well, my biggest focus here is again the distribution here on the token metrics, focusing on the mining pool, getting people to provide liquidity and bring value to these applications. That to me is really exciting, and it's why I resonate a lot with the focus point of Uniswap and a lot of the other ecosystem projects within the Oasis Foundation. So if you guys are interested, check out the link down below in the description to learn more about them. Definitely an interesting layer 1 protocol to watch, and has a lot of backing from some major names within the cryptocurrency space, such as A16Z, Excel, Pantera, and Polychain Capital, as well as a whole range of ecosystem partners for node operators and developers. But to conclude our conversations here, guys, around the crypto space right now, I think that we're entering into a very exciting time. I don't think the symptoms of a bear market would match up with what we're seeing now. I think getting above that $2 trillion market cap for cryptocurrencies, setting the heightened lows and higher highs over time, and generally seeing quite neutral sentiment and pretty fearful macro times is a huge sign here that crypto has flushed out any potential fear, any potential sellers in the market, and it's time for markets to start moving higher. I think that there's a lot to look forward to here, guys. I don't think it's a time to panic. And again, if I see something different, if I start to see the market getting fearful, establishing those lower highs and lower lows, then we will probably start to change our tone. But we've been very, very accurate. All the while, we've made some bad calls in the past. We've been very accurate this year in 2022 and in the later half of 2021. We called in this case, the rebound from the May correction in 2021. We talked about how we weren't going to be having the super cycle back in November of 2021, keeping our expectations more moderate. And on top of that as well, back in December, we called for the retest back down to the 30-35K range, this long-term consolidation channel we've been building up. And now it's finally time for us to reclaim the trend, for the bulls to take charge, and for the market to start trending higher. So if you guys enjoyed this video, I hope you will leave a like down below and also leave a comment down below on your thoughts, whether you agree or disagree. I want to get a conversation going with you guys. Always appreciate you all sticking through the video and giving me some time to ramble as always. But until the next one, thank you all so much for watching, and I'll see you all in the next video. Take care, everyone.